Let's look at the next journal. Cash disbursements journal. What type of transaction goes in the cash disbursements journal? Checks. It's just, and those are certainly involve cash, don't they? Okay. So this would be no different than the accrual method as far as your cash disbursements journal goes. So what we're doing is we're just listing all of the checks. No different from usual. I do want to point out, however, that when we buy inventory, what account are we putting it in? We're putting in the cost of sales account, account number 600. Okay? Why? Because we don't have an inventory account using the cash method. There are 3 accounts that we don't use in cash: accounts receivable, accounts payable, inventory. Even though we might have them, we're not accounting for them. Okay? Okay, let's turn the page. Page 312. We've got the payroll journal. No different. We're just recording the checks for payroll. Do you follow that? And then down below that, we have the general journal on page number 313 to record the depreciation and the matching share of FICA. And that's all we're doing. And under the cash system, we're done. Okay? Now, I want you to turn the page to page 314. Page 314 begins the general ledger. Now, to save some time, we have posted the cash journals into the general ledger. Okay? And we have arrived at a balance for each of these accounts. So what we're trying to concentrate on today isn't that cash system. I think that's pretty clear, isn't it? It's pretty easy stuff. You've done that several times. What we're trying to emphasize is this conversion entry. So we've already made the entries to the general ledger. Look at accounts receivable in the general ledger, account number 220. No entries to it. It's there, but we haven't entered anything. Same thing with inventory, same thing with accounts payable. Just haven't entered anything into them yet because we haven't recorded those. Let's go to the end of the general ledger and turn to page number 322. Up at the top of page 322, I want you to write cash method, okay? This income statement and balance sheet is based on the cash method. How many current assets are we showing here? Just 1. How many current liabilities? Just 4. The same ones that we showed in September. Okay? Now let's calculate here, if we could, what the balances are for October 31st. What's the working capital? Tell me what the working capital is for October 31st. 9812, okay? $9,812 working capital, okay? Now calculate the current ratio. What'd you get, Stacy? 6 to 1. Whoa! So in 1 month, you're telling me we went from 12 to 1 to 6 to 1. Now, frankly, I mean, that could happen in the real world, but the problem with the cash method is that current ratio will be all over the place. It's just not reliable. Okay? And I want to show you with this example that that's one of the downsides of the cash method. That current ratio might one time, as is shown here, be 12 to 1, which was excellent, and the next month be 6 to 1, and the next month could be 14 to 1, and the next month 3 to 1. It can be so changed so much that it can really distort it. Okay? Now, what our purpose then, we've got the financial statements on the cash basis. Our purpose is now to give it the accuracy. This was very simple to come up to this point. All we worried about was deposits, checks, and making a few adjustments at the end. It was done.